All right, let's get started. Now, Vendavo's Commercial Excellence Month is a number of sessions throughout October. We've had a number of select sessions focused specifically on the needs for Vendavo customers, but we've opened that up, opened the door, so now the privileges of being part of the Vendavo community are open for you as well. Let's move along now with introductions. Joining me today is Peter Regen and Rodrigo Navarro. Peter Regen is Global Pricing Practice Leader at Blue Ridge Partners, a strategy consulting firm focused on driving profitable revenue growth. His background includes leadership at the Boston Consulting Group, Oliver Wyman, and Unisys. He brings particular expertise to pricing, product market strategy, go-to-market model redesign, and large-scale transformation in challenging environments. That's going to be spot on for today's discussion. Peter has an MBA from Yale and a BA from Swarthmore. Rodrigo Navarro is also a managing director at Blue Ridge Partners. His experience includes serving as director of a private equity fund at a Mexico City-based bank. Rodrigo also worked with the Mexico City office of McKinsey. His education includes a master's in public policy and an MBA, both from the University of Chicago. Peter, Rodrigo, thanks for joining us today.
It's great to be here, Mitch. Thank you.
Thanks, Mitch.
All right, and of course, my name is Mitch Lee. I'm in your email inbox as the Profit Prophet, also the Profit Evangelist, but today I'm happy to serve as your humble host. A couple of housekeeping items before we get started. First, our obligatory disclaimer. Essentially, what we're going to be talking about today is subject to change. We will be taking questions along the way as much as possible. Use that Q&A function there on your Zoom control panel. Those questions will come in to Peter and Rodrigo and myself. We'll try to get those as we move through, but of course we do have time reserved at the end of the session to answer as many Q&A as you might have. Before we get started on the session, though, I want to set the stage at a very high level. Globally, we're going through something that really hasn't happened at this scale in terms of business disruption. Just like you, in the first 3 quarters of the year, we've had to pivot to deliver value, and we're talking about the community of pricers and sales leaders, and fundamentally the P&L owners that are responsible for sustainable profitability. There are a ton of internal challenges and externalities that we have to understand to create optionality for growth and investment in the business. Now, we've framed thinking for this using a 3-phase framework. The key to using that framework is, of course, to organize perspectives about looking at what's happening and what needs to be done today, tomorrow, and in the future. So that first phase of disruption, sure, we all have experiences that fit into that. Next, the pace slows a little bit and you're starting to repeat how you address those immediate problems. That's moving into the new normal or the next normal, as a lot of folks are talking about. And here's the difficult part. Now you need to look for the shift, that transition point, that inflection point for you and your market when the old normal no longer fits, because it's more about surviving a crisis. It's about being ready to thrive. So with that, let's get started. Here we are on October 20th. That means it's week 3, session 9. Today's keynote session is climbing back up the revenue ladder in today's turbulence. Let's look at our agenda. First, Peter and Rodrigo tell us a little bit about Blue Ridge Partners and what they do. Then we'll dive into the revenue ladder framework. And finally, we have a case study to discuss actions that you can consider to take. And of course, we'll close that out with live Q&A via the Zoom function that we spoke about just a moment ago. And with that, let's turn to our first agenda item. Peter, Blue Ridge Partner has a broad set of expertise. Please walk us through an overview.
Thank you, Mitch. So first of all, Blue Ridge Partners was founded in 2002. We're a strategy consulting firm across the US and Europe, and it focused entirely on driving profitable revenue growth. So we do that primarily in the areas of growth strategy, commercial excellence, commercial effectiveness, and pricing. Those are 3 core areas, and we've worked with somewhere north of 500 clients across our 18 years, and the industries mentioned here, from industrials to TMT to healthcare to business services. And one of the things that makes us, several things make us special, and that we've worked, the vast majority of the senior people, partners, and below the level partner came from one of the top 3 consulting firms. Most of us, or many of us, in senior roles, principal or partner, at McKinsey, BCG, or Bain. I was at BCG for many years. And then also have had operating roles in industry where we led businesses or led sales teams. So we bring that practical expertise of having been there and led, combined with the strategic perspective, which I think, and then we tend to work with more middle market to the low end of large companies, and do a lot of work for the portfolio companies of private equity, but very focused on impact and pragmatic solutions. So we love helping companies solve their problems, and particularly in the areas of revenue. So that's a brief overview on us.
We're really glad to have you here. That seems spot on for our discussion today.
So we were looking at, climbing up the revenue ladder. We started this and started working with clients. I was probably in May, and wanted to give an update of sort of where are we now and what does the world look like in terms of the relevance of this. And if you look at where we were back, and this is for the S&P 500 as a whole, there was a hole of 14% in revenue in Q2. And then if you look at the projections, that's where we are relative to that hole. So looking to be not that far under, if by the end of Q2 and of next year, and this quarter, not this coming quarter not being so bad either. But you have to look at that from several perspectives. So first of all, this is averaged across all industries, and the impact of COVID and recession's been very, very uneven, which we'll talk about in a moment. It's also the S&P 500, which is large companies have been much less impacted by the middle market companies on average, and small. We've read about all of the bankruptcies and the failing, small businesses failing. So this is sort of the best view, if you will, that you could take of the overall of economy and where we are in terms of revenue growth. So let's look at the next piece of this.
You bet.
Which
Peter,
is
this is a poll that we developed based on your research and the things that you pulled together. So for everyone on the audience, Peter set up something here that is really specific to today's circumstances. What are your views? Which industries do you expect to be most challenged as they try to climb back up the revenue ladder? As Peter said, this is the S&P classification. The numbers we're going to look at here is coming out of that, but go ahead and pick 3 of this poll as it comes up, and then we'll get a quick vote from everyone. If we can get that poll up. What we're going to be talking through is communication services, consumer discretionary, consumer staples, energy, financials, industrials, materials, and real estate. And Peter, when we were talking about this just earlier today, we struck healthcare off there, right? Because that's kind of the obvious one, right? Absolutely. So let's close that poll out and see what the attendees think. Having picked 3, if we close that poll, and we'll see what folks on the line think. Okay, so interesting. Big impact on energy and big impact on real estate. So before we go to the next slide, Peter, what do you think about these results? Is that a pretty good assessment?
I think we're about to show, but energy, people very good. Real estate makes sense, but it's interesting because there's the commercial side and there's a residential side, and then within residential, it's interesting. Like the second home market's actually been booming. Just as an aside, like the highest increases in years in places like Lake Tahoe, there's a 78% increase in the Lake Tahoe zip code versus prior year. And you've seen the same in places like the Hamptons and Martha's Vineyard and Aspen, where because people want to work from a second home. And then you've had, in general, there's parts of the country where the residential side is doing well. Obviously, commercial is way down. But just a thought on that for the moment, which I found interesting.
Yeah.
So one of our clients, one of their biggest clients, which is a large global company, actually projects more space being needed in the future for office space, because they polled all of their employees globally and found that over 80% wanted to come to the office at least 2 or 3 days a week once it was safe. And they expect to need more space because they're going to build in more ability to do social distancing. So, looking out over the longer term, that large global, one of the 10 largest tech companies in the world, one of the 5 largest tech companies in the world, his expectations is that they'll actually need more, which I found interesting. At the same time, they're not planning on doing any internal meetings or conferences in person until at least next summer.
Right. And maybe Peter would get the death of the cube out of this too. The cube farm goes away. So let's close that.
Let's close this and look at the answers.
Here's the results
versus the reality. Sorry.
Yeah.
So energy was dead on. Financials is number 2, which also did well in that in terms of people's expectations. And industrials, and if you look at real estate, it's actually in a completely different space. It's it's going to come back much closer to the S&P 500 on average. And then we didn't show it here because we were doing the real results versus that, but healthcare is the best performing. It's expected to be at like 109% if we look at the end of Q2. But so this shows the perspective for large companies. If you look at energy, like it was at 46%, it was down over half, at Q2 in revenue. And this is revenue, right? This is not S&P 500 valuation. Down, expected to be down 22% in Q2. Financials, you can see industrials. So financials got hit later. But this doesn't also, the S&P doesn't break out hospitality or transportation. So if you take those into account, they're obviously going to be harder hit and take longer. But it's very uneven.
Yeah, I think that's the key point there, isn't it, Peter? Is that these are broad, even this granularity. This is very broad brush, and there can be very vast differences in terms of expectations of performance, even within these segments, right?
Absolutely.
There's always, and I think that's maybe the takeaway here is things may look tough, but there are things to be done, right? All right.
Yes, so which is what prompted this. Sorry, go ahead.
This is what the idea here is. Even folks that are really stretched, there are ways to climb back up the revenue ladder, right?
Absolutely. And I think at some point we may be changing the name to climbing back up the profit ladder, which is going to come later. Everybody's predicting, end of next year to be back to the same levels of profitability kind of thing versus, being mostly back on average at a revenue level for large companies, by next summer. And we'll all have to see what happens. But what prompted this, we're, talking with our clients in, March, April, May, many of them were extremely hard. And looked at what needs to be done and what sort of a concrete plan to help you build the right capabilities to first of all climb out, but help accelerate climbing out. Because even within that, the unevenness, you want to be on the leading edge for your industry or your business, whatever it may be, in climbing back. And you also want to be able to climb back in a way, so accelerate it and be stronger. And have a game plan. And one of the things I think all of our clients try to do, and as consultants, we have to watch ourselves, is companies try to do too much, and there's only so much change you can manage. So how do you prioritize what you do? How do you sequence what you do in order to be as effective as possible in getting back, or in improving and being better positioned on the in the recovery and on the back end? So as we looked at that, we looked at, okay, being very focused on your customers and your first in selling, but also in understanding your markets and how they've changed. Things are different and will be different. Remains to be seen exactly which things will be different, permanently. But there's clearly systemic changes that have happened as a result of COVID and this recession. And so being, understand your customers, being able to have your sales force be more productive and be able to be very productive in a virtual selling environment, which is which requires, different technology skills, capabilities than people have, than many have used or used to this degree. Being very disciplined, and being more analytic and applying, because you're doing more virtual things, there's ability to do much more analytically than can be done before. You can have everything recorded. You can, use word searches to see if all the technologies that were used for customer service can now be applied for selling in a way that they hadn't been before. And obviously being efficient, and this is particularly true for those companies and industries that have been hardest hit from a cost standpoint. So being able to make sure that you're well positioned from that standpoint. So you could argue all of these things are always important, but if you're in a place where you're down 20% or 30% or more, one of my clients lost 98% of their revenue in the first couple weeks of March. And they were a multi-billion-dollar company. By the nature of their business, they got hit that hard. They're in a different state, but you then these things become more important, and was what led us to the rungs of the ladder. So let's talk about that in a moment.
Perfect.
So if you think about, what are those steps or rungs in the ladder? The first, which many are past this now, but is stabilize the commercial health of the business. So you need to quickly adjust to the new reality and stop the bleeding. And the building blocks that we'll get into, and Rodrigo will take us through in more detail, or get into that in more specificity. But so even if you've stabilized, there's still things there you may not have done that are worth going and making sure you do before you build beyond that. So that's the first step. The second step is building positive momentum. Once you've stopped the bleeding, looking at your revenue engine and building in the right best practices. And we'll talk about that in more detail. And then what needs to be done to reach for higher performance in order to improve the business, in order to become higher performing. And in general, recessions actually create much greater productivity. So if you look at every recession, in manufacturing, for instance, fewer jobs come back than were lost. But over time, a couple years after, you have higher overall production with much less resources, and that can be applied in across anything. Like it forces companies to be more productive, and you don't want to lose that, but you also want to build on.
Absolutely. Let's go to the next slide here, where I think you've got different topics that you look across that prioritization, right?
Absolutely. So across all three rungs of the ladder, huge focus on customers and prospects first, and what you do with them changes across the as you build capability and go in maturity up the ladder. But being very it's just critical, right? And the markets have changed, customers' needs have changed. Customers, some of them have been or will maybe or continue to be in financial distress. So how one helps and adapts, how one helps your customers and adapts to the market and the changing market needs of your customers and the environment is incredibly important. And then that means tying that into the products and services. Your sweet spot may be different, or how you serve your sweet spots is or may be different, and then predicting. And a lot of companies we've worked with have done scenario planning around what could happen in the future is important. Commercial capabilities is one of the places it's your sales engine is closest to the market, and so everything from virtual, which Rodrigo's going to talk a bit more about, and we'll talk about in the case study, to your go-to-market model, to the processes and tools you need, have all changed in the short term. And then we look at how is that going to change in the longer term and what you need to build. And then economics, obviously, cost structure early on in managing cash, but also thinking about pricing and how you manage pricing, how you manage that by segment and services is just is a critical part of this all the way across. So I'll
Peter,
pause there.
I love how this is very much focused on how the immediate organization, your immediate organization, is having to stop the bleeding and look for ways to improve it. But it also incorporates what your customers are looking at too, right? To be able to look at the greater, larger economic landscape. This is fantastic framework. Let's go to the next slide here.
So I'll turn it over to Rodrigo.
Thank you.
Hi, everybody. So thank you, Peter. Thanks, Mitch. So this is bringing it all together. So we have, again, 3 rows, which is the revenue ladder piece, and we have 4 topics. So really in all of them, the first line is about making sure we're defending what we have. So if you look at customers, it's about focusing on the most important customers, making sure that we're in close contact with them. And then the second piece is more about saying, let's start building the groundwork to get us better than we were before. So if you look at customers, is adjusting to new buyer values. So, buyer values have changed with all of this. So the winner is going to be someone who is able to understand the new lay of the land and able to adjust to it and go after that part of the market. So if you look at reach in the customer section, is find the best new markets to prepare and win and win them. And if you just, I'm not going to read all of them, but you just go across, you can see that sort of a theme throughout. So when it comes to product, it's about the first reaction is, so which products do we need to focus on of the ones that we already have? And then the next step is, so let's start thinking about how do we invest in our strengths? And then finally is, maybe if there's a need to have new products or maybe sunset some products that we currently have because the values have changed. Mm-hmm. And so that is the thinking of this framework. It's also, part of it is about prioritization, because we have seen clients that are already thinking about, well, yeah, the values have changed, so let's make these changes to say the product. But they really haven't first focused on what are the current products that makes the most sense now. So they're thinking about the future, maybe letting the past or the current case, not being able to adjust quickly. So again, this is more about this prioritization of it. And also, but again, the main goal is to be at a better spot in the future world than you were in the current world, because you just moved ahead of the competition.
Makes sense.
So in the next slide, there's more detail to this. So the way we thought about this framework was less about general guidelines, which of course are very important, but we want to put some actions next to those. So as we talk to clients, they look at different things in this framework and say, oh, well, that's a good idea. Maybe I should try something like that. Or I tried this, I haven't tried this. This has been successful, this hasn't. So I'll move to, let's say, for example, in the case of economics, and I'll focus on pricing, since this is one of the big topics here. So when it comes to pricing, usually when you're in the stabilized section, you just use pricing as a tool, maybe almost like a reactive tool to be able to regain traction or to not lose the big accounts. But it's about reaction, and it's about, let's make sure that we use pricing as a defensive measure so we don't fall deep into the hole. Then it's about let's rethink the price point. Now I mean there's been some changes here, and again I'm moving to the build portion, but so let's rethink about how are we more strategic around pricing. Where are we going with pricing? And then in the third, it could very well be a case where just the structure itself had to undergo a big change, because now the values are different. Now I don't know, maybe in some companies the sensitivity to prices is larger than it was before. So how do we just innovate the structure in order to be able to focus on the right kinds of customers? I also like to, in terms of products and customers, we think about it in a very similar way. So when we begin thinking about customers, the first point of stabilizing is being able to understand who the main customers are and focusing on them. So that, and also there's things that you can see also in commercial capabilities like empathetic selling. So maybe it's about trying to understand them more. So, and those are immediate. Those are, we're all in this together. It's an immediate change. But if you go again to the customer column, you start assessing the buyer values as you're building. So you start trying to see how you win back some of the lost customers. So you start to look at which of your competitors were more hardly hit by this, and maybe start going after those customers. So again, it's not about a huge, let's say, structural change to what you're doing. It's more about being a tactical but proactive versus the first rung where you're being more reactive. And then in the reach, a lot of it has to do with saying, well, I have this product and I used to sell to these 5 industries, but now these industries have been hit really hard. So maybe those aren't the best industries, but now these industries are better because of all the changes. So let's resegment and refocus our team to go after those. So again, the idea there is doing this quicker than the competition and being able to win more in the world.
So also, just if I could just add, to help you just structure your thinking, like what are the things you ought to be thinking about in terms of your go-to-market strategy and enabling yourselves to be successful. Some have used it as a checklist. We've had private equity firm clients have set out to all their CEOs as a checklist. Are you doing these things? Have you thought about these things?
Sounds like a powerful tool. Let's take a look at that case example. And Rodrigo, I think you're going to walk us through that.
Yes. So we're currently working with a company that is, like many companies in a situation similar to this. So they've been saying, well, we've lost some revenue in the, let's say, mid-teens, that the revenue that they've lost. The sales team is, more saying like, yeah, it's COVID. That's the reason. But the leadership is saying, sure, of course, COVID does affect it, but there's some internal things that we could do a lot better. So this idea about where to focus. So where should we look at these things? Are we in a point that we are, hit by the storm and we're good? Now let's start growing. Should we just rethink the go-to-market model? Are these more tactical things that we need to need help on? So what we did with them is we actually, part of this tool set that we have with this framework is a self-assessment. And that self-assessment, let's say, has three main sections. One is understanding the situation of the company. As you know, Peter said at the very beginning, industries are hit differently. Some industries are like, man, we're doing better than before, and others have been hit really hard that they just say, we're just waiting for this storm to pass for us to keep selling. So it actually the same thing within companies, within the industry. So the first thing we do when we do one of this is to understand where they currently are. A second piece is understand what they've done so far. So some have already done a round of cost cutting. So have they been successful on that? So that's part of the assessment. And the third is, what is the focus that the team thinks it should be having now? And we use this as a way of having that discussion, because sometimes there's a lack of alignment. Some people might think that it's all about the economics, while others it's all about the customers. So we use that self-assessment in a workshop to make sure that everybody is aligned. So this, what you see here, is a company again that reduced its revenue by in the mid teens of revenue, and also it's a professional services, and they've had gone, of course, through some cost cutting and different things, and they were saying, what do we do now? When we did the assessment, it was a very interesting result, because as you see, we have the legend is we have three different things that are highlighted here. The green is when more than 80% of the people rated that these actions were of high importance. So again, the tool is a 1 to a 5, so it's a 4 and a 5. The bolded is when 60% rated these things as high importance. And one of the pieces that we found very interesting is that the underlined is when people had like a strong position one way or the other. So more than 40% of the people thought it was very important, and less than 40% of the people thought it wasn't important at all. So those were like good topics of discussion. So
it's an interesting delta set, an interesting way to compare out misalignment, right?
Exactly. And we also try to look at if there's some, I guess, let's call it bias to the alignment. So is it that maybe the sales leaders tend to all believe that, let's call it a just sales comp plan is important, but the people in finance don't? We looked at all these, but actually in this particular case, it was a pretty spread throughout. Or sometimes the frontline sales team is one thing, but the managers think something different. So in this case, it was pretty aligned throughout. And so again, so these were the results of that assessment, and we had a workshop to decide which of these were the things that should become initiatives that the company should take forward.
So Rodrigo, a question that just came in: who took the survey? What were their roles and their functions? Was this all senior level, or was it broadly, frontline to top of the organization? How does that work?
In this particular case, I mean, it could be any way the company wants, but in this particular case, it was throughout the organization. It was focused on the sales team. So some frontline sales team members, some frontline managers, and the leadership team of the company.
Oh, of course, that makes sense. That makes sense. So I want to really call attention to what Rodrigo's called out here with respect to those highlighted green sections, because those were the ones where in this instance, the company really thought those were important things for them to do now. And again, this is current times. And I want, as those of you in the audience, pay special attention to those, because we're have a quiz coming up for you in just a second. If you were in this company and you looked at these results and saw those highlighted ones, I think we've got this set for the next slide. Yeah, absolutely. These are the initiatives, right, that they came out with, Rodrigo, in terms of the listing. In no particular order. The numbers there don't mean a ranking at this point, but I guess the question here, the poll, if we can pull that up, is based on the case that Rodrigo just described. If you had that set of circumstances in your company, and these were the initiatives that came up out of that, which one of these, which initiative would you prioritize? So would that be around sales assessment, sales talent assessment, sales training, refresh the approach to sales management, codifying the virtual sales process, a market study to pick up new sweet spots, deploying new lead gen campaigns, how to evaluate products in terms of enhancement, or using pricing as a proactive tool. What would be your priority? Just pick one out of this. And I think, Rodrigo, you're going to talk through this, and then we'll look at some results here in just a second, right?
Yes.
Okay. And if we can close that poll, let's see what the results coming back on that are. Interesting. Okay. So the big winner here is market study to identify sweet spots. I think people are sensitive to dynamics, right? Changing market conditions. But then there is some emphasis on sales management, refreshing that. And then following up is the virtual sales process and using pricing as a proactive tool. Rodrigo, did those surprise you?
Actually, I think they're pretty aligned. They're pretty aligned with what the discussion that we had with the team. So
okay. Let's close out the poll and let's look at the results of what you have there.
So what we did here is that we had, a simple 2x2, right? Like what are the pieces that have the most impact, and what are the ones that are the most complex. So you can see there's 3 that came out, which maybe they're not like intuitive even as we put them here in the chart, but let me just talk through those. So number 3 was the one that was, let's say, the immediate let's go and do right now, which is the refreshed approach to sales management. And this was for a few reasons. One, this particular company, we had done work with them on improving the sales process, building playbooks and all that. And it hadn't really stuck. And all the managers said, like, yeah, it's kind of like on me, right? Because we know how it should be done, but I'm not checking it as I should. But the other piece was now, I mean, they were used to being on the road all the time. So now it's all virtual, like we're doing right now, right? So so that changes the way management works. So previously, they have been reacting, right? So you have this issue, and now you have to make sure that everybody gets, in a virtual world, and now you have to react to pressures from competitors in the market. So they have very little time to think, about how, what does this world look like going forward. So that was one big piece of this. Number 5 is on the market study to identify sweet spot. That was an important point. And again, they just felt like this had a very big financial impact, even though it could potentially be a big change for the company, because if the sweet spot materially changed, it could even lead to having different roles or different assignment of accounts, or things that are more long-term than just simply changing your practices in management. So that was one that they really cared about, but fully knew that it was, it will take more time. Number 4, which it's the virtual sales process. That's one that was interesting in a way, because if you recall the previous page, it was underlined. So it was one of the activities there was a big split. And the big split from the discussion we had in the workshop came because to some, just putting on Zoom, that's the virtual sales process, and that's it, right? So one of the quotes that we heard was, we are basically doing the exact same sales process with Zoom. And so people who thought that was virtual and that was fine felt like, we're good, we have Zoom, we can get online. But the more forward thinkers say, well, this is an opportunity. I mean, this virtual sales model just gives you a big opportunity of a new way of selling, because in that particular instance, and I'm sure that in many of the companies, you have specialists. So there's might be like a specific industry that you have people that just know more about that industry. You might be selling like a differentiated product that is new. So you have specialists in that particular product. So that idea of, like, in the old world, just setting up everybody needs to go to a meeting, it's difficult. So you might be going, like, have a first meeting just with a regular sales rep. And then as you figure out which product they're going for, then you bring in a specialist for a second or a third meeting. But in the virtual world, you don't need to do that anymore. because companies that are very, that have fully internalized the virtual model, have teams that you can be having a conversation right now, and we say, oh, by the way, there's this product. So, oh, you know what? Let me call in Mitch, and and Mitch knows I'm having a meeting where he could be called on, and I call him in, and we're having now a discussion with the expert right there. So that's also just thinking about the productivity that should be in the virtual world is just different. I mean, you can have many more meetings than traveling. So there are a lot of many differences with the virtual model that we feel that are just, you just can take advantage and just be more productive.
I think those are great insights there, Rodrigo. That the difference, selling is selling, but selling in person is absolutely different selling virtually. I want to say kudos to our attendees. There was a really high alignment in terms of what they had highlighted in the poll relative to what this company said that they wanted to prioritize. I think it was almost 1-to-1 on those priorities. So yeah, I think we've got a lot of smart business people on both sides of the conversation. That's a good start. So Rodrigo, I think you want to tackle one of these in particular, right? On the next slide, we're going to be talking about virtual selling.
Yeah. So some of these points I was already discussing about virtual selling. So there's many differences here. So one is, let's call it the burden on the seller, how it's different than before. Before, you would just show up and you have the undivided attention, right? In the virtual world, you have to earn it a bit more. You have to be more prepared. I mean, there's a lot of distractions you can have. The energy, the pace is more important than it was before, and you have to be more memorable than you were before. So because again, with the virtual world, I mean, I'm sure you guys have seen it as well. You can just do many more calls than if you're traveling around. So if you have 8, 10, 12 calls in that day, you have to be memorable to be able to stand out, being able to sell. And before, if it was just a couple and you just show up, that is, it's again a different level of need that you would have there. And then if you look at things like daily cadence, so I mean, you have a slower pace when you're in person, you can just reset. And here, I mean, you go from one meeting to the next with very different topics. Also, again, the ability of the manager to be able to do more ride-alongs or call-alongs than they were before allows them to be more engaged and be more involved. So again, that's another opportunity that could be taken. And also on workflows. So the workflows, now that things are digital, once again, like back to the example about, now we want to go to the next step of the process. I mean, there's videos, you can give them links. There's many things that you can do digitally to make the workflow more, more streamlined. And even like on when you're having a meeting with somebody. So going back to one example, a previous client example. So if you are having a meeting with somebody, and let's call it a recurring client, and you can see all the stats of what they bought, what they buy, what was the last time they bought a certain product. I mean, if this should be replenished every 3 months, why is it 6 months that they haven't ordered? And you can have those things in a more quick way that can just increase your effectiveness as a seller.
Yeah, new challenges, new opportunities in terms of that engagement. Sure. All right.
And the capabilities could be different of the sales rep. So yes, it's a new many things.
And just to throw one other thing, there's bringing management in at all levels, right? So you can have sales management, you do ride-alongs, but the ability to have like the CEO participate in a sales call is incredibly different. Just for myself, yesterday, I was in meetings in Moscow, Paris, France, Lyon, France, Chicago, New York, Dallas, and LA, all yesterday, virtually. But and all of those were with multiple people. And the ability for one person to be many places at once, I don't think many companies are thinking about that yet in terms of how do we leverage our best people, not just those that are part of the traditional sales practice. I mean, in the past, people would record a video or they'd have someone very senior call, but there's tremendous opportunity to do those kind of things.
Absolutely, Peter. And it goes both ways, right? If you as a seller, a provider, are bringing your best assets forward, your best expertise forward, then it's an opportunity to ask for that kind of commitment from the folks that you're talking to. I'm putting this up here for you, but that's
Yes.
dependent on you wanting to engage. This is not for fun, because Zoom fatigue is a real thing for everyone. You didn't travel, but you were probably pretty fatigued yesterday after having that many meetings across that large of a span, right? You didn't get that airplane
Yeah.
time to do a little bit of dwell and reflection.
And the time zones, yes. The day
And the
started
time.
earlier.
Much earlier. Absolutely.
And one thing I like to add to this virtual point as well is that it changes also everything that has to do with the sales team. So now maybe the managers can manage more people or fewer depending on the situation. Maybe the comp plan should be a little bit different because now there's more productivity. So maybe the quotas should be a little bit different. Maybe the benchmarks, the metrics that you follow should be a bit different. So again, I think, and the main point is this is not your old process and your old everything on Zoom. It can, if done right, depending on the industry, it just changes the way you do most everything.
Great points. Great points. Guys, thanks for these insights. I think let's take a look now at some of our Q&A coming in, and a couple stacking up here. So Peter, this first one is for you. Peter, you call out 4 areas to focus on, 4 topics: customers, prospects, products and services, overall commercial capabilities, and economics, those being the 4. Of course, each case will vary with the specifics, but if you could generalize, which one always seems to show up as an area that needs attention?
I mean, it varies over the cycle to some degree, but it clearly, the customer, we say 2 different things. There have been more changes in customer behavior and consumer behavior with this pandemic and this recession than most any other in our lifetimes. And so then that leads to all the changes that then flow through. I was going to also say, the commercial piece in terms of how we're actually, we were just talking about, how you're touching your customers. I mean, there's some people that are flying now to go see customers and meet in person, but it's rare. And so the vast majority is virtual. So I think that's the first place I'd start.
That makes sense. Thanks for that. This next question is going to go to Rodrigo. This is about the case study. In the case study, 2 items seem to rank high, but were not picked. Those were conduct sales talent assessment and develop sales training program. Could you expand on why those sales-related initiatives weren't prioritized, and specifically, obviously, Rodrigo, in this case for this engagement?
Yes. So in this case, those were 2 things that are actually being worked on now, but it felt like the second level of priority. And always with sales talent, we deal with this a lot. Like we see a situation where, let's say, maybe the teams don't have the right playbook on how to sell. It could be that maybe management is not at the level that it should be. So then you have to ask yourself, so what is the biggest lever here? Is it the talent? Is it the playbook? Is it the management? So one of the things that we had in this discussion was, well, and actually, what the managers were the ones that made this point. Is like, if we haven't asked them to focus on the things that are the most important, how can we really assess the talent? So let's make sure that we are managing the right way. Let's make sure that we're doing things the right way, and then we can assess the talent. So it's not that it wasn't important. It was more of it's a next step that we need to do after we do the first.
That makes sense. But what do you do right now? It's not an instance of starting from scratch. You're starting with what you have right now in order to move quickly. Absolutely.
Exactly.
Okay, this one's for, actually, I'm going to point this at both of you. I'm going to start off with Peter. This is a follow-up tied to that question we had just a moment ago. Across the 4 key areas, obviously, and they acknowledge that was a great answer relative to customers and prospects and needs in bad times changing a lot. How would the focus shift for good times, in times of relative calmness, would you expect a different key area of focus, or what? What's your expectations, or what have you seen when you engage with folks in that?
You tend to be more in either optimization or it's, going after new things, right? So expand to adjacencies. So it could be, strategy driven, is an example, but it's, and you're outside of the world of cost focus and trying to manage cash that we saw at the beginning of all this. So you get more, the ability to revamp pricing models, the ability to revamp, to optimize within your product portfolio. You get more of across the board things, I think, in good times, depending on where that company, is specifically in their maturity or the needs and where the pain is. But if we look at, coming the crisis, first everybody was just in crisis mode, react and trying to get to stabilize and focused on the health of their employees. And then it was moving and or managing cash and supplies and making sure they could stay in business. And then it shifted to focus on commercial engine and selling and how we do that. And now it's, expanding across to the other things we're talking about. So Rodrigo, if you want to add to that.
Yeah, I would say that if we think about this process, like when things are very bad and they just happen, it will be more on the lower rungs. And as things start getting better, it go to the higher rungs, kind of like how the framework is built out. If we call them good times, like let's say after all of this, I would say that, to Peter's point, then you start looking at what's next. Let's start looking at, which industries of customers, what's next, what is the product that's next. But I would say that if we think about the COVID world, about when it all hit and where we are now, I would say that it's more on the rungs, on the horizontal axis, on the on the vertical axis than on the columns.
Absolutely. As I think of some of those defensive measures you mentioned, Rodrigo, in terms of pricing, you might say, yeah, we really have to do something around watching costs and doing something that's very margin protective as a defensive position to not have revenue or margin erode. And then eventually you get to that point of, okay, we've got some breathing room. And Peter, you hit on this. What are the changing needs? How do we take a little bit longer term view when you have that breathing room and it's not the platform that you're standing on that's a fire, you got the fire out and you can take a little bit longer perspective. Fantastic. Thanks, guys. I really appreciate that. I think that concludes just about all the questions that we have right now. I do want to call attention, Peter and Rodrigo have called out the revenue ladder. We have a similar thing here at Vendava with regards to commercial excellence. We call it the maturity assessment. And we have a simple survey that can help you frame the discussion around that. You can grab a screenshot to get that URL or just use your QR scan code. It's a quick 10-minute assessment to walk you through things that help you start thinking about what might be next. And of course, I'm sure Peter and Rodrigo would be happy to have a conversation with you as well. So Rodrigo, Peter, really think your time and effort to produce a really valuable set of insights for our attendees today. Thanks for joining me today.
Thank you, Mitch, and thanks to Vendava for hosting this whole series of webinars across the month. I mean, it's great stuff, and it's always a pleasure to be with you and to participate. Thank you.
Thanks, Mitch. Thanks everybody for joining.
Yes, absolutely. Thank you all, and thank you for the questions.
Yeah, absolutely. Thanks to everyone that joined the webcast. So until we speak again, this is Mitch Lee, your profit evangelist, saying have a profitable day.
Thanks. Take care. And stay safe and well.
Absolutely.